You're listening to the Practical Wealth Show with Curtis May.
All right. Hey, welcome to Practical Wealth Show Live. This is Curtis May. Today, we're going to do a short live talk, and also this will become a podcast. So those of you hearing this, you'll also see this on YouTube. If you want to see the videos or the examples I'm going to show live, that's what I'm doing is a video. But we're going to talk about being the bank. And one of the things that I hear is, one of the things that we talk about, because somebody says, I hope people come to me and say, I want to build wealth with whole life insurance. And that's not what's going on there. And so I'll do a few of these. I'm not going to do it all today, but one of the things is I kind of show this as it's a savings strategy, right? So where is the best place to store cash is really your first question, right? And so should you be saving? When I say saving, I'm going to show you a picture example of it. Safe, liquid, accessible, guaranteed. Okay, so that's saving. So your 401k is not saving. So being the bank is a concept. So a lot of people conflate that and I want to hear about insurance. Insurance is not the bank. Banking is a concept. It's a strategy. And so the way that at Practical Wealth, our framework is we teach financial principles that help our clients become and remain financially free. And so there are 5 of those, right? Save what? Save 15 to 20% or more of your gross income, right? Like if you can't do that, I was just telling somebody this morning, then you can't do infinite banking because you're spending everything you make. You have to put money away. Principle 2 is maximum protection, right? So you've got to play defense. So most people are underinsured with everything, their auto, their home. They don't have umbrella coverages, no disability, inadequate life insurance, no wills, trust. And so one of the things in our process, we kind of teach that. And we have a program where we'll create a 1-page, I'll show you a little bit later, financial plan to help people get organized with their money. See, guys, the financial plan, meaning what do you want and why? There's a guy named Lauren Dutton, who's the father of financial planning. And what the original definition was helping average people, meaning middle income people, spend, cash flow manage, save, invest, insure, and plan for financial freedom or financial independence. See, most people think financial planning is investment and they think they're the same thing. They're not. If I were to argue out of those 5 things, investing is literally the last thing you should be doing. Okay. And everybody starts with investing. They start with funding their 401k. I think that's a mistake. You need to save money. You need liquidity, use, and control of your capital. So we're going to go there. So we're going to now, one of the things that we're doing, so why can't you save? Why can't you be the bank? Okay, is because you're not saving money. Well, how do you find the money to do this? So I'll go over some other short videos later, but today I'm going to talk about that. So I'm going to share the screen. All right. So if you've seen me before, we call this your personal economic model. Somebody asked me on a podcast, so what do you think about the economy? I mean, I'm aware of what's going on, but I can't control that, right? What I can control is as you see the picture, I can control my personal economy, which is my production and consumption as a family. Okay. And so, Jim Rohn says that the winds of adversity set on us all. The difference is how you set the sail, right? So one of the things that we teach in Practical Wealth, I want you to learn how to set a better sail because you can't control the economy, but you can control your personal economy, which is, are you protected? Are you positioned to take advantage of opportunity? Do you know what's going on? How do interest rates affect you? How would a hyperinflation affect you? What is going on? How would higher taxes affect you? What's coming down the pipe? So you do need to be aware. Okay. And then you got to protect yourself because at the same time, a lot of people made a lot of money during the pandemic. Why? Because they were prepared. They knew what was going on and they ran a play, right? My business went up during COVID, right? That was already virtual. So I've been doing business virtually for probably almost 10 years. Okay. So that wasn't, oh, what do I do now? I can't go see people. I don't go see people, right? And so that's the thing. So now let's look at how money works. So you have seen other videos I have on this. So I'm not going to go over this in a lot of detail. I just want to kind of show you one section of this, right? So This is looking at so we have this conversation with our clients. We actually, if I can create a custom one for you with your numbers in it. Okay. And so what happens is generally money comes in. So let's say you have a job, W-2 or your SE, self-employed, right? So you like basically 1099 income. And so money comes in, money goes through your inflow pipe. Then Uncle Sam and the state and the federal want their money. The lifestyle regulator is what you would call a budget. We don't like budgeting. I'm gonna actually talk about that today. Most wealth is lost here because most people aren't in control of their cash flow, and they literally if they save, it's like 5%, right? And then what happens? Money comes in, hits your current lifestyle, which is whatever you do, what you drive, where you live, what you eat, entertainment, where your kids go to school, all that stuff is your standard of living. And so what happens is you have to get control of this because if you make more, there's something called Parkinson's law, which we have another video on YouTube about, is your appetite for what you want is never ending. Okay. So you can always spend all the money that you make. So I know people that make, I've got clients that make 250 a year, but they spend 260. Okay, so guess what? You're still broke. You just had a higher level of broke. But if your income would stop, you're SOL. So you have to get control of this. You have to, my mentor calls it you got to create a lifestyle ceiling. So like I know for my mentor makes hundreds of thousands of dollars a year, probably $1 million a year. You know what he does? He creates he looks at his money every month and he creates what he calls a lifestyle ceiling. He says, Curtis, I try to keep this number to no more than $10,000 a month. So he runs his lifestyle on what is that? $120,000 a year, which he lives quite well on. And then now where does that money go? So, cause here's the thing, what we want to do is when money hits your account, the first rule of wealth is you must pay yourself first. So that means save. So we're going to fill up the green tank, right? Savings. Let's define savings: safe, liquid, accessible, guaranteed. Okay, so you need what Don Bland would call luck, liquidity, use of control, or what Kim Butler would call clue, right? And so this little talk is adapted from a part of a great book. I don't know if I can see this. So this is from one of my mentors' book. It's called Perpetual Wealth. So this is usually like when somebody becomes a client of ours, this is kind of like the third book that we give them. This is a little bit meaty. It's a great book though. You can order it. Members of my Money for Life Club, email me and I'll send you a link. You can see it. I have had the book for a few years because I'm part of the prosperity economics movement. And so we've had the book and I've been the PDF version, right? So it's cheaper to buy the book. I actually printed mine out and bound it, but this is better, right? So order her book. And but if you have I have an iPad, so I've got the thing where I can draw in it. I like to carry stuff with me. So if you've got the PDF draw on tool, it's a good tool because you can annotate it and all that good stuff. So anyway, you want to save money. So the problem with saving is in order to save people, I want to pay cash. You got to save cash. And then what people do is they drain the tank, right? So what we want to do, we talk about being the bank. We want you to store your capital somewhere that you can use it without using it. So you want to collateralize it. So the private reserve or the family banking strategy is using properly structured dividend paying whole life as a place to store cash. Now, instead of liquidating your savings, because if you drain the tank, you're not making any money on it, right? And so if you keep doing this, you don't never ever let compound interest, which is not the primary thing you're shooting for, but as a foundation, compound interest works over time at best, works best over time uninterrupted, right? So you need to have uninterrupted compounding. And then what happens is part of the banking strategy, instead of going into debt, which is using other people's capital, the first goal we teach is you can be a customer of the bank or you can be the bank. Nelson Nash says you finance everything you buy. So if you pay cash, boom, that just means you financed it or you're giving up interest you could be earning. So either way, the number's the same. I'm going to just do a talk just on that. So what happens is what you want to be able to do is build up a pool of capital so you can be able to direct interest that formerly was leaving your personal economy, a wealth transfer, and bringing that money back and keeping it. This is your asset column, right? So you got to keep money in your asset column. Asset is right, rich dad, poor dad. This is your liability column, right? Liabilities, money you owe. And so the goal is, let's start with the goal. Begin with the end in mind. Your goal is financial freedom, right? Passive income, greater expenses. So you need to save money so that what? You can buy or build cash flowing assets. That is what you're working for. So now, but Curtis, where do I get this money from? How do I get money in the policy? Well, you have to save it, right? And so now how do you do that? Well, let's talk about that. So here are 7 things that you could do. And I thought about this because I was actually literally going through a client's game plan. So I'm going to go over them in earnest. So take some notes, and then I'm going to break it down of how I would actually look at this with a person. So you want to redirect your savings. So if you're already saving a lot, is that the best place to store cash, right? See, because when you're looking at benefits, then you got to ask yourself, well, okay, what gives you the most benefits for your storage? See, Nelson's other book is called Building Your Warehouse to Wealth. So you want benefits. So let's say if you could wave a magic wand, what benefits would you like? Tax deferred growth, tax free distribution. It'd be great to get a competitive rate of return. You want to be able to put as much money as you can afford to save. Additional benefits we'll show you in a second. You can use the money as collateral. It was safe in this context in most states means credit protected. No loss means it's not correlated with any other, it's a non-correlated asset. So markets going up and down doesn't affect it. You have in contractually the ability to take a loan against the money that you saved, right? So you can use it without using it. When you do it, your payback plan is unstructured, right? So you get to pay it back. Your money's liquid. You can use it and you have control. And it will be great if you could have deductible contributions, but that's not a thing. So if you want to I kind of just let the cat out of the bag, talked about some of the benefits that you're looking for in a policy. So if you don't know that strategy, then I have a video on here. I'll try to put a link to it. I forgot how to do that, called Intro to Family Banking. And then we'll talk about that. If you like that, you can reach out. So what happens is, let's look at where do you store money? All right, let's look at cash. Okay. So you need cash. I like cash also, like a week or two in your cupboard, right? These are the benefits. Doesn't have all the benefits that we want. Rates are low. Plus, it's whatever little interest you're earning is taxed. If you are collateralized with it, usually they're callable. If your financial situation changes, you lose your job, they'll eliminate what happened with Wells Fargo. They'll just eliminate your credit line. It's not so much. Money markets, you should have them, but not that you can't use it for being the bank. All right. Savings accounts, you should have those too, but it's not good for being the bank. So why do we use permanent insurance or as our family fund? Because it has all the benefits except for the contributions are not deductible. All right. So riders are available at additional cost. We only use properly structured dividend paying whole life insurance with a mutual company, just so we're clear. So if you hear this and, oh yeah, somebody talked to me about IUL, I have another video about that. It could work if it's funded right, but for banking, that's blasphemy. Okay. And I like a product that's been proven for over 100 years. I don't like new stuff. I'm a traditionalist, right? And loans are a contract feature. There's a death benefit that if you got a loan outstanding, they deduct it so if you had a $400,000 loan and you had 400,000, 500, $500,000 of insurance, you had a $50,000 loan, they would deduct that off the top because you basically got the money up front. So they're not keeping your money. I have the whole show on that. Somebody said, well, what happens? They keep your money. It ain't keeping your money. The cash value is part of the death benefit. Okay. So insurance agents, you listen to this, understand the product. Okay. Because you're saying dumb stuff like that. You don't know what you're talking about. All right. Now, why do I say that? Because I didn't know that for 15 years. All right. So I'm telling you, you got to work on your game. There's a deficit. The money doesn't go in dollar for dollar because of the way the IRS rules work. Whereas if you try to put too much money in too soon, it becomes a modified endowment contract. Okay. So we'll go into that later. So, and there's also, you can add a disability waiver premium. So if you're unable to work, your plan is self-completing. Okay. So now, one of the things I always ask clients, if this actually existed, can you think of any of your liquid funds that you would not want to have here? See, think in terms of benefits. Most of y'all are storing money where you don't have this stuff. Okay. Or don't even talk about a 401k. Right. So now how do you get money in here? So let's go back. How do I get money in the green tank? So separate from your risk tank. Right now, we're just talking about the green tank. So this is how we separate it with our clients. So let's go back. This smaller. All right. So we're going to redirect savings. So now you got to look at, all right, hey, Curtis, I'm already saving 15, 20% of my income. I put it in my brokerage account. I put it in I already save a lot of money. Well, then, all right, you got the habit, but you have what we call a tank issue, right? Because if you need money, you just take it out, but then you got to put it back and then you take it out. And so you never get ahead. All right. And so that's the thing. So now you can just redirect it and deploy some of your capital into a properly structured dividend paying life insurance so you can capitalize your system. So now you can begin to do what? Redirect debt back to yourself. You can begin to capitalize so you can buy cars. Our clients use it for down payment, for real estate. It's whatever. That's why we call it infinite banking. So I would send you to so if you want to do this stuff, you got to go to the source. The source is Becoming Your Own Banker by R. Nelson Nash. All right. And what is it called? Building Your Warehouse to Wealth. See, the only thing we're talking about here is storage. Where do you store your cash? Now, let's go back. So let's look at the other link. This is right out of Kim's book. I'm just going to add some commentary. So if people are funding beyond the match, right? I just did this with somebody today. They were like, oh, don't, because if you look at it, you're putting all this money into a qualified plan because you think you're getting the match. Then I would fund it to the match because the money, like I would lower it if you look like this, right? And you got all this money over here, but you have very little liquidity and you've got debt. Okay. You got to make a decision because it's your money. What's the best higher use of my money? Do I continue to plow money into here where I can't touch it for 20, 30 years? Or do I need some short-term access to capital? What if you're more of an active investor business owner? Do you need your money accessible so you can use to make more money? Okay. So you can redirect your savings. We did this with a person. And she says, yeah, I think I should lower I had lowered it without me from 11 to 8. And she says, well, all right, I still want a little bit more in my green tank. Well, lower it to 4. You already got a lot of money in there. And you got debt over, I don't know, 15,000 credit card debt being charged 23%. So where do you think you need to put? Where's your highest, best use of your money? So you have to think about your money. One of the things Penelope, I can't think of her name. She was a guest on my show. She talked about having a money date, going over your numbers with yourself or your significant other every 30 days. Like you have date night, hopefully you have date night weekly. You should have a money date. All right. Because that which gets measured gets done. So you need to think about this stuff. Move money from investing. So if you got a lot of money going that you're just directly like plowing into funds and ETFs and cryptos because you think, all right, I got to do something for my future. But again, you don't have any liquidity. You might need to redirect some of that money. See, because when I talk about investing, most of y'all ain't investing by definition of what I call investing. Investing, this is from the book, Benjamin Graham's book. I'm paraphrasing, Intelligent Investor, because even in that book, and he's talking about securities analysis, that they do a great, the one of the chapters is investing versus speculating, right? And they're still talking about paper assets, the market. Well, he says, I'm quoting, I have the book, but I'm not going to go reach for it now. But basically, investment is something you put your money into where your principal is safe. You got a reasonable opportunity to make a profit. If it doesn't fit that definition, you are speculating. Okay. And so if you're speculating, you got money in Robinhood and that's the other thing. Some of those other things where you're doing $200 a month into a Roth. Well, but you're still tying it up and where it's not liquid, right? You might want to consider, man, what's the highest, best use of my money? Okay. So I'm not going to tell you, I'm just showing you where you can find, as you analyze your numbers, this is what we do for our clients. What are some other things to do? Not giving advice, investment advice, legal advice on this video, right? You can reduce your debt payments. Okay. So one of the things that you could do is if you have some capital, sometimes we'll move it, dump it in here, then we'll take a loan against your money. Because what happens is if you just snowball the debt or you just, all right, first thing I do is got to get out of debt. Well, okay. But that's a transfer, right? Because you're giving all your money away. So, okay, you're out of debt now. You've paid off the debt, but you've liquidated this to pay off the debt. So, okay, You're debt free, so you've improved your cash flow a little bit. Hopefully you can save it, but you don't have any money. Okay. So the first time emergency comes up, what do you got to do? You got to go back and go into debt, which is spend money you don't have, using other people's money. And you're using your future earnings as collateral. Okay. That's debt, bad debt, right? So now you could reduce them. You could snowballing, which I would do a separate video on that. Whereas a lot of people are inefficient. They have minimum payments, $95, but they're sending 250 and another 300 there and a 150 there. And they're just like throwing money, but it's not efficient. It's not organized, right? So you need to look at it, stack it up. We help do a thing called once we get them organized with their cash flow, we do a thing called a DA, debt elimination account, and we'll show you how to organize it and pay it off, or we'll show you how to implement it with infinite banking and pay it off where you're out of debt and you get back most of the money you get to retain if you do it right. You can reduce your taxes, right? So a lot of times when we say that, so we got look at the tax filter down here, right? Most wealth is lost here, right? So one thing you could do is if you have the IRS savings account, meaning that you're getting a big refund, then that means your W-4 is filled out wrong. So I would go to irs.gov and play with your withholding, get a paycheck stub or a couple of paycheck stubs and see. I know nobody wants to owe, but you don't need to get back $4,000 if you're struggling to save. Then you need to get that money in your check now. So that's an easy one. If you had a home-based business, you can engage in a strategy called income shifting. It's a great book by Sandy Botkin called Lower Your Taxes Big Time. He gives you how to keep good records, there are tools to do that. And then if you do that and adjust your withholding, because you can now shift some of your expenses, boom, that frees up money to cash immediately. Okay. You can redirect other spending. So I'm going to get into managing cash flow here in a second. So getting control of your lifestyle money, or the lifestyle regulator, which we call, and we help people create a cash flow map with this. Okay. And earn extra income. So you need to get some money coming in here. So you need a side hustle and you got to learn to earn. You need what Laurel Langmeyer would call a cash machine. You need to learn to make new money and not starting something you don't know. Some you already know how to do. You're a teacher. You can do a tutoring service. Can you cook? Can you babysit? Can you drive for Uber? Can you do network marketing? I have a show with I always say Jay Jones, the Black Entrepreneur Blueprint, learning about e-commerce. There's all kinds of stuff you do. So you have to think about making money. Okay, you got to make new money because generally all the money you already made is allocated. So you can't get blood from a turnip. So you can't, meaning that if you know that expression, meaning that you can't, it's only so much to cut. Like, and you want to focus on creating new money and prosperity than to focus on fear-based hoarding. So we like to call it intentional cash flow management. All right, so let me pull this up. And so there's a great book by George Clayson, The Richest Man in Babylon. And so a lot of times, guys, he says in the book, he was talking to his friends in the second chapter, all I do is really teach that, the 7 cures for a lean purse. He says, if you're broke and you've been working 5, 10, 15, 20, 30 years, he says in the book, if you have not acquired more than a bare existence in the years since we were youth, it is because you have either failed to learn the laws that govern the building of wealth, which is most of us, okay? Or you heard, I was talking to somebody, well, you heard you should pay yourself first, but you don't because, well, I can't do that. I got bills. I can't. What most people do is say, well, if I have any left over, I'll see if I can save it. Well, you're going to be poor. Let me just break it down to you. I'm not even going to be nice. Okay. So it's 4 things you can do with $1: spend it, save it, invest it, or give it away. So the order, you have to train yourself that, all right, I have to do what rich people do. See, poor middle income people, I'm going to pay bills. If they fund it, they put in their 401k first, but that's not saving. Okay. And so you got to learn the rules. So the 7 cures for a lean purse, the Rich Dad Poor Dad, like this book is an audio book. If you just do a YouTube search, you've got to learn to you got to invest. The one thing you have to invest in is in between your 2 ears, right? And so you want to learn those rules. And so one of the things that we teach is most people are taught to budget. So our tagline is tell your money where to go instead of asking where it went. Because the problem is, so right now, where am I? Right now, I'm just talking about this little thing right here called the lifestyle regulator. So we're actually getting ready to do a course, a 4-week mini course on this. And so this, what I'm showing you now, governs all of this, right? So the game is won and lost at cash flow management, right? And so most people budget, or business owners, you may use a P&L if they use it all because they don't really know how to run their numbers. So I'm gonna talk to you business owners later. And but what happens is most budgeting tools are just expensive tracking tools, but they're not planning. So this like driving your car looking through a rearview mirror. Okay. And so it tells you where you've been, what you spent. Oh, I spent this much on food, blah, blah, blah. And it's good to know that. But that from a planning standpoint, that doesn't really do anything. You have to tell your money where to go. Okay. You have to assign a task and you have to know where it's going to go when it hits your account. Okay. Because you've got certain bills that are static, they're the same, right? You've got variable expenses and you need to save. So you've got to tell your money where to go. That's one of the things that I'm not going to go through this right now. So what happens is most people are in what I call a circle of confusion. They just, money comes in, they pay bills, they've got stuff on auto pay, they've got this and that. Usually do it out of one or two accounts. What we teach and what I would teach you, and I'm going to give you a link to a report called Budgeting Stinks, is to you kind of got to organize your money when it comes in, right? This is all within the lifestyle regulator. So when money comes in, you need to save. So we teach, if you walk away with one thing, create for yourself a wealth capture account and just go to HR or whatever and create a separate account and see if you can put away 10, 15% of your before tax income automated. Remember, savings has to be automatic and systematic. It's a system, right? So you have to pay that's what it means to pay yourself first. You got to put it true. You got to put yourself at the head of the list and make sure that if nobody else gets paid, you get paid. Okay. And then the same thing, we'll do the same thing for business owners. You've got to, are you managing your cash flow? So there's a way to map that, that's simpler to understand than a P&L, but I use the P&L to build it. And so that's the cash flow mapping. So I'm going to put that in the system. And then once we do that, we help people get organized and we teach them the 5 principles of personal finance. So all I do is I teach the 3 rules of investing. Invest in what you can control, stop chasing returns, and the 5 rules of personal finance: save, protect, legacy, full replacement of assets at death, 6 to 12 months of security and velocity. So I just basically, we take all this stuff and we put it into a 1-page game plan. So if you like that, reach out. You can text Be the Bank for our free report, The Value of Liquidity. If you want, you can go here and I'm going to leave this up, Budgeting Stinks report. Go here and check out our map. All right. And you can go to our landing page here and get a picture of, or not picture, you can get the guide of, of Budgeting Stinks and get a free ebook. And then we can reach out and do a complimentary consultation with you. If you care to, you can also go to Practical Wealth. Ooh, I spelled that wrong. Wealth, Wealth. So you see, it's spelled wrong there, but spell wealth. I messed that up. And you can actually go and schedule a talk with us. Let's have a talk. Let's talk money. Let's get you organized with your money so you can make better financial decisions. But those are ways that you can look at you got to get control of your cash flow. You've got to redirect money you already are maybe losing unknowingly, unnecessarily. And so this is the exercise that we walk people to. Step 1, get control of your cash flow. Okay. So anyway, this went a little bit longer than I wanted to go today, but I thought this was helpful. And if you're watching this live, if this is intriguing, hey, reach out, get your free report. Oh no. Oh, this is the money. So actually, if you want, this book is also I would go to Amazon and just get it. But also we have a cash flow near newsletter, our Money for Life Club. And if you reach out, we'll send you a link to that and you can take a test drive of that. And our goal is to get people to the position of what we call FU. So, which is passive income, twice your expenses. And so we talk about that, how to get into velocity, how to invest in the 3 of the 4 asset classes. So the 4 asset classes are business, real estate, paper, and commodities, with the emphasis on cash flow. Don't talk about commodities much, but we call it the ugly cash flow triangle, which is business, real estate, and paper assets. Paper, like private lending, notes, that kind of stuff. So if you don't know about that stuff, you just go back, subscribe to the Practical Wealth Show or our podcast. The podcast and also the YouTube channel. And so all I do every week is interview people that are experts on you taking control of your money. All right. So thanks for listening. Go out there and make it a great day, and look in the show notes, and we will put the links I've mentioned here on the show notes. Have a great day, everybody.
Thanks for listening to Practical Wealth. To access the show notes and resources, go to practicalwealthshow.com. To get your questions on the show, go to practicalwealthshow.com. This show is for entertainment purposes only. Before you make any investment decisions, consult a professional. This show is copyrighted by Practical Wealth. Written permission must be granted before